These 5 investor mistakes cost me £146,000, but you can avoid them by watching this video. I've been investing for 24 years, and with financial education, I've built 6 figures in 3 different asset classes since 2019. But I've also made every mistake you can think of, and some you probably can't. I'm going to teach you in just 10 minutes what took me 18 years to realise. Mistake number 1. Emotions will wreck your finances. Your biggest risk with investing isn't the market, it's your emotions. Over the years, I've made far too many decisions with emotion. This isn't investing, it's reacting. One of the most painful examples was in 2021 during the last crypto bull run. I put 2,000 into a meme coin because a few mates at work were talking about it. I got myself a little bit too excited, shall we say, with no research and no exit plan. In 6 weeks, it flew up to £68,000. I thought I'd made it. About 10 of us on this one particular job thought we'd be retired within the week. I checked my phone every 5 minutes, literally. I couldn't concentrate on anything else. I wasn't present with my family. I was living in the future, already spending money I hadn't even withdrawn. And then back down to 2,000 and then nothing, because I didn't sell, because I got greedy, because I was emotional. Since becoming financially literate in 2019, I've been much better with my emotions, like investing in index funds for the last 6 years and only checking on my fund a few times each year. Unfortunately, some of my old habits came back with a bang in 2021 for a few short weeks. Crypto is hard on the emotions, it's volatile, and it's not for everyone. Thankfully, I've learned my lessons from 2021 and now invest in crypto long term, like I do with index funds. I'm calm and neutral, and I'm not getting overexcited about the latest meme coin. Let me know below what's an investment mistake you've made because you got too emotional. Mistake number 2, quick, easy money is a lie. I used to believe that the lie that most people secretly believe, that there's a shortcut to wealth, that if I just picked the right stock, found the right coin, listened to the lads at work, getting overexcited about the latest get rich quick scheme, I'd be rich overnight. But let me tell you what that belief cost me. In 2010, I was working offshore. Literally everyone was talking about how some of the lads were making over 100k on rock-upper shares. So I jumped in with zero research because I didn't want to miss out. Guess what? By 2011, I lost everything. I lost £8,000, which might not sound like a huge amount, but it was our life savings at the time. That was just a small part of my negative decade of chasing quick, easy money between 2008 and 2018. I gambled on stocks without any research, bought premium bonds hoping to hit the jackpot, blew thousands on football bets, scratch cards, lottery over the years. From the outside, it might have looked like I was investing to friends and family because I had a few properties, but I was gambling. And here's the thing, gambling doesn't just lose your money, it consumes your time, your focus, your confidence. It wasn't until I finally stopped chasing quick, easy money, quick wins, and started playing the long game that my wealth began to grow. Today, I pound cost average into index funds. I invest into property slowly and consistently. I have other investments, but hopefully you get the point. If you want quick wins, play the lottery. But if you want wealth that lasts, that works, play the long game. If you can zoom out and think long term, your success as an investor massively improves from my experience. Now, before we carry on, this video doesn't contain any financial advice. The full disclaimer can be found below in the description. Mistake number 3, FOMO will empty your wallet. FOMO, fear of missing out. It's one of the most dangerous emotional triggers in investing. It makes you forget logic, it pushes you into things you don't understand, and it makes you buy high and sell low. The exact opposite of what works. In 2006, I purchased a property as I was leaving the Royal Air Force with no job, no plan. I steamed in because 2 of my best friends were buying a property on a new estate and were talking about making a quick 20k before they even moved in. I got jealous, and yes, FOMO kicked in. I'm not proud of this one, but I suppose we all make stupid mistakes in our early 20s. And despite not making money straight away as planned, this particular property has turned into a really good rental property. Another crypto example, going back to 2018, I invested 6k into 3 coins. My little portfolio went up to 30k from 2017 to January 2018. I didn't sell anything because of greed, because of FOMO. My 30k went back down to 6k, then almost nothing. FOMO isn't just about greed, it's also about insecurity. It's about not wanting to feel like you've missed out. But you know what I've learned? There's always another opportunity. And if you miss one, it's okay, because the right one will come when you are ready as an investor, like when you put the effort in and focus on financial education. Now, I invest with discipline. I stick to my plan. I take profits. I say no more than I say yes. And guess what? I haven't felt FOMO in years. I'm neutral and calm with investing, as I've said. Have you ever felt FOMO as an investor? Let me know in the comments. Mistake number 4. Personal finance matters more than you think. Here's a little fact of life. You can't invest properly if your personal finances are a joke. In 2016, I had a good income, but I spent far too much. Yes, my income had come down a little bit after deciding to stop working offshore because of my fear of helicopters, but still I was lucky enough to earn a good income. Unfortunately, my personal finances were terrible. 3 holidays, a £10,000 front room makeover with a new log burn, etc., a brand new Audi Q5 on lease, weekends away for fun. We went from having £70,000 in premium bonds to under 30,000 fast, and I didn't even notice it at first because I wasn't tracking my money. I was clueless. I wasn't budgeting. I wasn't thinking like an investor. I felt anxious, ashamed, frustrated, but I didn't change because I didn't want to face reality. That year taught me that lifestyle creep is real, and if you don't manage your spending, it will eat up your wealth before you ever get a chance to grow it. After focusing on financial education in 2018 and 2019, my personal finances started to improve. Here's what you can do to improve your personal finances if needed. Spend less than you earn consistently. Build a cash buffer before you invest. Aim for 3 to 6 months. Separate your wants from your needs. When you get your personal finances in order, you create space to invest. And if you want more info on how to improve your personal finances, see below for a recent video. Mistake number 5. Don't take investing mistakes personally. This one can really have a negative effect if you let it. And to be honest, it held me back for years. In my early 20s, I bought a few properties with my cousin, my best mate. We thought we were going to make it in property. We'd be property millionaires and we'd be buying our dream villa within a few short years. Buying in a rough area, we thought would get redeveloped. It didn't quite go to plan. By 2008, I was 50,000 in negative equity. I felt like a complete failure because part of my identity was that I was in property. I was a property investor, and instead of learning from it, I internalized it. I took it personally. I let it define me. A few early mistakes, the financial crisis, and a lack of financial education meant that I stopped investing in property for about 13 years. Looking back, I now realise my biggest mistake wasn't the bad investment decisions, it was stopping. It was stepping away from the game because I felt ashamed. I didn't invest into assets between 2008 and 2018, and it cost me a fortune in lost opportunity. Well, I did invest in the stock market, but it was more like gambling, as I've said. That decade cost me financially and emotionally. I let the fear of failure get in the way. Today, I wear my mistakes like badges of honour. I even post them on social media so others can learn from them, like this video all about mistakes to avoid. Because when you remove the ego, you unlock growth. I don't take wins too seriously. I don't take losses too personally. Like the fact that the mistakes mentioned in this video cost me about 146,000. I just keep going. And that's what I want for you. You are not your portfolio. You are not your last mistake. You are an investor in progress. As a person, you are a work in progress. We all are. Summary. This is the type of info I wish I had in 2001 because it would have saved me 18 years of making too many mistakes. If you can listen to this video, take some notes, really learn from my lessons, then act on it, you will save yourself a lot of time. And I'm confident you will retire much earlier than the vast majority. So here's what I want to leave you with. If you can master your emotions, if you can avoid chasing easy money, if you can ignore FOMO, if you can manage your personal finances, and if you stop taking losses personally, you will become a skilled, confident, long-term investor. To be honest, it won't happen overnight, but it will happen. I made every one of these mistakes, and now after 24 years, I'm finally investing with peace of mind, purpose, and a plan. This is what I believe with everything I've got. If you focus on financial education, it leads to financial literacy, and financial literacy leads to financial freedom. If you want more info on how to become financially literate, see below for a recent video.